There are two main reasons why a person would want to estimate the ending inventory. One is they're too lazy to count it. That happens a lot. And another reason is maybe the inventory was destroyed in a fire or something and you have to just estimate what was there. These are the formulas that I'm going to use to estimate the ending inventory. First, let's notice a few things about these formulas. Every business that sells inventory makes a subtotal on their income statement where they take their revenue, subtract their cost of goods sold, and that equals gross profit. Now, notice that cost of goods sold plus gross profit always equals 100%. So if you know that cost of goods sold is 70% of revenue, then you could infer that gross profit would be 30% because the 70% and the 30% have to always add up to 100%. So just so your eyes can see it again, if cost of goods sold is 85% of your revenue, then gross profit would have to be 15%. Or vice versa. If a homework problem told you that the gross profit percentage was 15%, you could infer that the cost of goods sold percentage would be 85% because cost of goods sold plus gross profit have to add up to 100%. One more time. Cost of goods sold plus gross profit, they add up to 100%. Now, how did we get these percentages? Well, if cost of goods sold is 150 and revenue is 200, you would take 150 divided by 200. That's how you would get the 75%. That's called the cost of goods sold percentage. The other percentage is called the gross profit percentage. You would take the 50,000 divided by 200,000, and that would give you 25%. If you know that gross profit percentage is 25%, you could infer that the cost of goods sold percentage is 75%. You wouldn't even need to calculate it. So here's another scenario. Let's say that all the numbers in black, all the numbers in purple are given. Well, if the 75% is given, you know that the pie chart is good, or the pizza is going to be 100%, the gross profit is going to be 25%. You could infer those black numbers. Now, see that red question mark? What's that going to be? 75% of 200,000. Now, I just want to show you that I'm going to use the schedule on the right, but that schedule on the right is the exact same logic as the inventory T account on the left. It just repositioned the numbers. You should see that. Now, accountants, when they talk to each other, they usually would write down a T account on a piece of paper to express an idea. But if an accountant is going to prepare some presentation to a non-accounting audience, then the accountant will not display the T account form of the logic, but convert it into a schedule form, because we don't want the audience to wonder what's a debit, what's a credit. So the schedule form removes all that. Okay, to summarize, before we start our actual problems, these are the formulas that I will use every time I estimate ending inventory. When I took the CPA exam 30 years ago, I remember working the Glyman-Delaney questions, and I could get this question right 100% of the time. I was windmill slam dunking. Every time they asked me how to estimate ending inventory, I just used this approach, and there was never a question that I didn't get perfectly right. Where students get it wrong is they forget how to start the question. But if you're familiar with these formulas and you start with these formulas, the rest is cake. Okay, we're going to do two problems, both similar. Your typical homework problem in the textbook will give you these numbers in black. Sometimes they make you search for the number in blue. Well, how could they do that? They could say gross profit percentage is 10%. And then you would have to infer that the cost of goods sold percentage is 90%. That's not a big deal if you've had a little bit of practice. I put in yellow there the goal. That's what we're headed for. And also notice that these two formulas are related via the variable cost of goods sold. So we'll calculate cost of goods sold in the first formula and carry it down to the second formula. The numbers in black are generally available in the accounting information. Okay, so I just take 90% of the revenue, which would be 585, and then I carry that 585 down to the next equation. And there I've got 3 of the 4 variables. I just solve for the ending inventory, the yellow number. Ending inventory, 15,000. We'll do another one very similar to the first one. It's easy if you start the same way. These are the 2 formulas. Every number in black is given. The box in yellow, that's my goal, so I don't forget what I'm doing. First thing we do, it was given that gross profit was 25%. Therefore, I can quickly infer that the cost of goods sold percentage was 75%. And 75% times 480,000 revenue is 360,000 for the cost of goods sold. The 360,000 carries down to the second formula, the inventory formula. And then lastly, we find the ending inventory. The 240,000 is an estimated ending inventory.